Your net worth is not your salary. It is not your job title. It is not your car. It is one number. Everything you own minus everything you owe. And that number decides more than you think. It decides how you sleep, what risks you can take, whether an emergency destroys you or inconveniences you. Most people never find out what life looks like past $10,000. This is your life at every level of net worth. 0 to 1 million.
Your net worth is $0. Not zero savings, zero net worth. The debt cancels everything out. You have $340 in your checking account. You have $4,200 on a credit card at 24.99% APR. You have a car loan balance of $8,400. $340 minus $12,600. That's negative $12,260. But you don't think of it that way. You think about the $340. The transmission warning light came on Tuesday. You Googled the repair cost. $1,100 to $1,400. You closed the tab. Every month you stay here, the gap gets wider. Not because you're failing, because the math at this level works against you by design. The first move is not dramatic. It is $1,000 in a savings account that you do not touch. That changes everything. Not the number. The fact that the number exists. Your net worth is $4,200. You built it in 14 months. $300 a month into a high-yield savings account. 4.7% APY. The interest is small. The habit is not. The transmission warning light came on again. This time, you don't close the tab. You pay $1,100. It is uncomfortable. It is not catastrophic. You still have debt. The credit card balance is down to $2,100. You're paying more than the minimum every month. The interest is still eating $42 every month, but the direction changed. You start reading about index funds, a Fidelity account, 0.03% expense ratio, total market fund. You don't put money in yet. You just open the account. At $1,000 to $10,000, you are not building wealth. You are building the floor that wealth requires. The emergencies still hurt, but they stop being permanent. Your net worth is $23,000. The credit card is paid off completely. The $42 a month in interest is gone. You redirected it. $42 a month into the index fund. Plus the $300 you were already saving. Plus the minimum payment you freed up. You are putting $610 a month into the market without changing your income. You didn't earn more. You stopped bleeding. You just gave yourself a raise. It doesn't appear in your paycheck. It appears in 30 years. You need a new car. Your credit score is 694. The credit union approves you at 6.1% APR. You bring a pre-approval letter to the dealership. You do not negotiate the monthly payment. You negotiate the price. $23,000 car, 48 months, 6.1% APR. Total interest, $2,900. 2 years ago, The same car would have cost you $10,200 in interest alone. Same car, different number. At $10,000 to $50,000, the decisions start compounding. The mistakes stop compounding. You own a home now. You put 10% down on a $280,000 property. Your mortgage rate is 6.3%. Monthly payment, $1,554. Your net worth calculation changed the day you signed. The home is an asset. The mortgage is a liability. The equity is yours.
Every payment builds something. The rent you paid for 6 years built nothing. Your emergency fund is $18,000. 6 months of expenses, fully funded. The emergencies still happen. The transmission, the medical bill, the layoff scare. They happen to you the same way they happen to everyone else. At $50,000 to $150,000, money stops being the main character in every decision. You stop doing math at the grocery store, not because you're rich, because the floor is solid enough. Your net worth is $310,000. $190,000 in investment accounts, $87,000 in home equity, $33,000 in cash. You didn't get a raise. You got promoted once. The compounding did the rest. $610 a month at 9% average annual return over 12 years is not $87,720. It is $143,000. That is not a typo. That is the math of not stopping. You start thinking differently about your job, not because you hate it, because you can do math now that you couldn't do at $0. If you needed to, you could stop working for 14 months and not change your life. That number, 14 months, changes how you sit in a meeting, how you respond to a bad performance review, whether you take the risk or don't. You are not financially free, but you are financially protected. Your home has appreciated. The equity is $140,000 now. You don't touch it. You don't pull a HELOC for a renovation you don't need. You let it sit. A friend asks you to invest in his restaurant. You say no. Not because you can't, because you ran the numbers. At $150,000 to $500,000, the most important financial skill is not growing the money. It is not losing it. Your net worth is $740,000. Your investments generate approximately $33,000 a year at a 4.5% withdrawal rate without touching the principal. That is not your salary. It is what your money earns while you sleep. You are not retired, but retirement is now a decision, not a deadline. The home is paid off. The mortgage is gone. The $1,554 that left your account every month for 18 years does not leave anymore. You redirect it automatically. The transfer happens the day the mortgage ends. Your net worth crosses $1 million on a Tuesday. There is no notification, no moment, no fanfare.
the number just changes. And the life behind it already changed years ago. Quietly. One payment at a time. Your net worth is just a number. But that number decides whether an emergency destroys you or inconveniences you. Whether you sit in that meeting afraid or certain. Whether retirement is a deadline or a choice. $0 to $1 million. The distance is not a salary. It is not a windfall. It is the decision to start and the discipline to not stop. The clock is already running. Every month you wait is a month that doesn't compound.